Hello everyone, welcome to the market opening bell on Wednesday, November 12th, your 10-minute guide to the stock market. After the Hong Kong stock market rose over 400 points on Monday, its performance was mixed on Tuesday. The Hang Seng Index opened 99 points higher, initially rose 139 points to a high of 26,788, then fell back once dropping 137 points to a low of 26,511. It closed up 47 points or 0.18% at 26,696. The X-share index rose 18 points or 0.2% to 9,461. The Hang Seng Tech Index gained 8 points or 0.15% to 5,924. Total market turnover was 210.2 billion Hong Kong dollars. Southbound funds net bought $4.467 billion of Hong Kong stocks. Among them, net buys include Xiaomi at 1.176 billion Hong Kong dollars. Tracker Fund at 650 million, China Mobile 357 million, CNOOC 333 million, PopMart 305 million. Net sales include XPeng 2.266 billion, Alibaba 2.024 billion, Tencent 464 million, SMIC 437 million, Hua Hong Semiconductor 344 million, Meituan 216 million. According to statistics, Southbound funds have net bought Xiaomi for 10 consecutive days, totaling $6.544 billion. Net bought CNOOC for 3 consecutive days, totaling $2.409 billion. Net sold Alibaba for 4 consecutive days, totaling $3.346 billion. Net sold Meituan for 4 consecutive days, totaling 461 million. Net sold Tencent for 3 consecutive days, totaling 1.063 billion. Technically, although the Hang Seng Index held above 26,600, turnover was only 210 billion Hong Kong dollars, and the 9-day RSI was around 60, indicating insufficient upward momentum. The market will still need to test whether it can hold steady above 26,600. The 3 major A-share indexes opened high but closed lower. The Shanghai Composite Index held the 4,000-point level, closing at 4,002 points, down 15 points or 0.4%. The Shenzhen Component Index closed at 13,289, down 138 points or 1%. The Chinese index closed at 3,134, down 44 points or 1.4%. Total turnover in Shanghai and Shenzhen markets neared 2 trillion yuan. The renminbi central parity rate against the US dollar was lowered by 10 points to 7.0866. On the Hong Kong market, XPeng surged nearly 18% to close at 108.5 Hong Kong dollars, marking the largest single-day gain since July 27, 2023, and hitting a new high since July 2022, with turnover exceeding $9 billion. It is reported that XPeng has planned the launch of robotaxi operations, aiming for mass production and commercial deployment in the second half of next year. Robots and EVs share core hardware and common models and datasets, achieving deep cross-domain integration and scalability. The China Association of Automobile Manufacturers released the latest data. In the first 10 months of this year, domestic auto production and sales reached 26.692 million and 27.687 million units respectively, both up over 10% year-on-year. Among them, new energy vehicle production and sales were 13.015 million and 12.943 million units, up 33.1% and 32.7% year-on-year respectively. In October, monthly new energy vehicle sales exceeded 50% of total new car sales for the first time, reaching 51.6%. In exports, new energy vehicles reached 2.014 million units, up 90 8.4% year-on-year. Film and entertainment stocks showed gains, with Maoyan Entertainment up over 5%, recording a 7-day winning streak. As of November 10th, the 2025 film market total box office has reached 45.018 billion yuan. In the coming months, plus 4 import films are set to be released, expected to help push the full-year box office past 50 billion yuan. The 4 films are Zootopia 2, Now You See Me 3, Demon Slayer, Infinitely Castle Arc Chapter 1, Re-Attack of Akasa, and Avatar Fire and Ash. All are well-known IPs in domestic and global markets with solid audience bases. Among them, Demon Slayer is scheduled for release on November 14th, with Maoyan as its distributor. Most Apple concept stocks underperform, with Hon Hai Precision down over 5% after earnings. Reports indicate that due to poor iPhone Air sales, Apple has indefinitely postponed the next generation iPhone Air launch. Sources say Foxconn has dismantled all but 1.5 iPhone Air production lines and is expected to completely halt production by month end. Another partner, Master Precision, ended production of the model at the end of October. On US stocks, the Dow rose sharply. The Dow gained as much as 605 points intraday and closed up 559 points, or 1.2%, at 47,927, a new closing high. The S&P 500 rose 14 points, or 0.2%, to 6,846, but concerns over high-tech valuations resurfaced, with Nvidia and AI-related stocks falling. The Nasdaq dropped 58 points, or 0.25%, to 23,468. The Nasdaq Golden Dragon China Index, reflecting Chinese ADRs, fell 5 points, or 0.06%, to 8,233. Alibaba ADR fell 3.1%, while XPeng rose 7.8%. SoftBank Group said on Tuesday it has sold all its Nvidia shares to fund its own AI development. Nvidia fell nearly 3%, the worst performing Dow component. Tesla fell 1.3%, while Apple rose 2.2%. ADP data showed that in the 4 weeks ending October 25th, U.S. companies cut an average of 11,250 jobs per week, indicating a cooling labor market in the second half of October. Our stock pick today is China Sanjiang Fine Chemicals, stock code 2198. China Sanjiang Fine Chemicals is primarily engaged in the production and supply of chemical products, including ethylene oxide, ethylene glycol, polypropylene, MTBE, butadiene, ethanolamine, and surfactants. Despite facing numerous challenges, the group's vertically integrated structure, diversified raw material procurement capabilities, and flexible market response strategies have led to a significant improvement in profitability in the first half of this year. Compared with the same period in 2024, profit attributable to shareholders surged 95.5% to 301 million yuan, driven mainly by favorable market trends for key products, especially ethylene glycol, combined with the group's agile and adaptable operational strategies. Robust downstream demand from the polyester industry continued to drive notable increases in the average selling price and gross margin of ethylene glycol. At the same time, in response to changes in the external market, including the impact of U.S. tariffs on ethane exports to China, the group dynamically adjusted its procurement strategies, raw material mix, and production portfolio to maintain competitive advantages in cost efficiency and product pricing. Operationally, the group continued to benefit from the full-cycle integrated operations of its 6-phase ethylene oxide, ethylene glycol production facilities, and light hydrocarbon utilization units. On the other hand, the flexible ability to rebalance inputs of naphtha, ethane, propane, and methanol enable the group to optimize raw material costs and reduce exposure to price volatility of individual commodities. This integration also enhanced the ability to rapidly adjust product mixes, capturing favorable price spreads in ethylene oxide, ethylene glycol, butadiene, and surfactants. In terms of product performance, ethylene glycol remained a standout with both average selling price and gross margin recording strong growth compared to the same period in 2024. Butadiene has maintained strong momentum since 2024, supported by healthy demand from the synthetic rubber and automotive sectors. Ethylene oxide and surfactants benefited from stable demand in household cleaning, construction chemicals, and industrial applications. The group expects demand for ethylene glycol, butadiene, and surfactants to remain solid, while pricing for polypropylene and ethylene oxide is expected to stay stable, with growth potential if downstream demand continues to recover. The group will continue to pursue opportunities in high value-added products and further downstream integration to enhance revenue resilience. Buy recommendation at 2.82 Hong Kong dollars, target price $3.15, stop loss at $2.67. I do not hold the above stock.